Alrighty, Doc here from North America. Good morning, good afternoon, and good evening. We've got a stock market that's going sideways. They push it down, they push it up, they push it down, they push it up. You can see the VIX pretty much. Yo, Janos, I saw that about the VIX. I know. I'm not sure if I responded. I'm trying to remember if I responded. Um, the VIX is, they were reaching for it. It's like insurance. They reach for it just to protect themselves. But the Federal Reserve is very sturdy. I'm going to use hedge fund language, okay, not normal trader language, hedge fund language. Hey, Robin, and let's say that the Federal Reserve is very sturdy, and they know what they want to price things at. That's pretty much what it comes down to. So the money managers came in, they sell it. The money managers lift up the VIX, and then it starts to roll over again. Matter of fact, let's show you what it looks like today. I think did I save it? No, it doesn't matter. I'm going to go to it live. Let's see, open workspace, and the 3. And let's put it up on the right thing. You know what? I bet I have the VIX in the beta too. Let's see. Let's see. Right there's the VIX, and the VIX is holding up in the weekly buy for a second week. Not bad there. It's showing some healthiness, I guess you could call it. We're just following the histogram on this. We don't. This is the Fast 5 algorithm. That's why it's bluish. It has the best accuracy rate out of all of it, compared to the 3, and that's what the green line is, the 3. And then there's a 2 standard deviation. The green has a 2 standard deviation when it does its histogram, so that's why they're both always in the plus or always in the minus. Now you can see here the VIX is holding up relatively well, overall. You can see is that today? That's yesterday. So you can see yesterday they haven't started trading it yet. They will not start trading that until another hour from now. I think it's the at the money, in the money, and out of the money call, and the same thing on the puts. At the money, in the money, and out of the money. So there are 3. I'll say it again. You know what in the money means? It means that it's worth the most on the center strike price, the strike price that they're using. Then at the money means it's right around the center, but it's not as worth as much as in the money. And then out of the money is worth even less than at the money. Okay, so they use those 3 calls and 3 puts to calculate the VIX index. Now think about that. What does the VIX index use? It uses the SPY, uses the SPY, okay, or the ES 500, whatever one you want to refer to. All right, so now they're looking at options in the money, at the money, and out of the money. They price them together and average them, and that's how we're using a Black-Scholes model of volatility, and that defines the index. Now, as I said, think about what they're using. Who controls basically the stock market? The Fed, right? Central banks control it. So they control the VIX. Just the same way it seems like they control the gold, because who else in the world would trade metals like that but only the central banks? In other words, who would waste money the way they waste money? Only the central banks. Fund managers would go out of business. They wouldn't be able to do it. Some can say, oh, well, some fund managers have enough money. They wouldn't. They'd go out of business if they did those same stupid things day in and day out. You have to be able to print money to do those stupid things. In other words, you have to invent money out of thin air and have nobody to answer to. In other words, money managers are managing other people's money. if they keep on losing money every quarter, sooner or later they don't have money. It goes to zero or they take it away from them. Okay, so when looking at the VIX index is governed by the Fed. So the Fed keeps the VIX married to the low end of a range. In other words, we've seen the VIX off and on throughout the years be higher or lower. But much more higher than this. But now we're in an era where the VIX is parked down at the low end of the range. It's an awful, it's compared to what it has been at times, like 26, 27, or 30, or 40. Depending on the product too. You look at the VIX on oil. I think it's like around 36 or 37. Here the stock market VIX is at 15. I think the Qs are around 23. They do have a Q VIX. Let's see if I can find that. I'll find it along. I know that there's a Q VIX and there's a oil VIX, and so we'll go. I guess we could go look at them if it's that important. What do you think, Janos? Is that answering any of your questions about the VIX? Remember, the Fed runs the VIX. They control the VIX. Money managers must have thought, okay, let's just buy some, volatility protection, just in case. And so they can say this to their, investors. See, we have some insurance on. And they'll probably say, the investors will say, do you have any gold or Ethereum or Bitcoin on too? And they'll say, oh, yes, of course. It's a wonderfully developed game. That's the hedge fund way of describing it. On the trading floor, they got it rigged. That's what we would say on the trading floor. The Fed has it rigged, but up in the hedge fund universe, it's a finely developed system that works smoothly. How do you like that? And sometimes it can become sticky. And insurance buyers, exactly. So despite SPY moving higher, one can get puts. And matter of fact, it also does it during the day too. Your first couple hours of the day, the volatility is very high. And then as the day goes on, it goes back to the norm. So that means that, inventory, there's a demand in inventory on one side or the other, be it being long or selling and being, in it going down in value. And so not the VIX, the prices of the markets themselves. And so markets, are basically, they feed on the world for the first half hour, and then by the second hour, things start to smooth out. So if you do an option spread, let's say you're selling an option spread, in other words, you're selling the premium, then what you do is you do it in the morning time, not necessarily like 4 in the at the last hour of the day. You do it in. Now the volatility can pick up at the last 15 minutes, but overall, the real action is in the morning, and they're the ones playing with it. Oh yeah. And so you can see here, it's 4 days in 5 days now in the buy, and going on a sixth, and we're actually playing with a second week in a weekly buy. I don't think we've seen more than 2 weeks in a weekly buy on the VIX in 3 years or something. Oh no, I guess when they cleaned out the 2020 V bottom, that might have lasted 3 weeks, and then they just they started selling the VIX again. So and if you're wondering, if anybody's listening and wondering, that was back in late February or mid-February all the way to March, and by the second week of March, I believe Rob and I talked about it a lot, and we talked about it here on the webinars. I was screaming from the rooftop, V bottom. Option volatility was dropping dramatically, and from all the remember the Dow had swung 6,000 points, 8,000 points, something like that. That was a lot of move. It was like a third of a move, almost a third of a sell-off, and then and that was because the Fed was getting rid of the put sellers. That's what that was all about, and we talked about that here back then, and that's why we were so, it's a V bottom, and they were saying maybe the next couple of years they'll get back to the high, and they got back to the high in, I guess, like, what was it, by April or May or June, something like that. It didn't take long for them to get back to the top. So that's your answer to VIX. VIX is a tool by the Fed, like gold is, and once in a while there's a overabundance of participation, and that's what you're seeing is they're trying to ensure. Now I think, what did I see? I saw a stat that said something like, what was it? It was something about the markets, or something like they've been. Well, that's it. It's like that Goldman Sachs article, where we talked about where they're saying that something like 5 out of 6 investors are shorting the market, but we don't know what they're shorting the market for. We just know that that could be literally flattening out their position, not being bearish. Imagine if you've been long for 2 years, the market's going up, and now you're getting concerned about sell in May and go away type of stuff. It would make sense for you to sell into that against the stock you already have, because you have had such a win that would make sense. Now that doesn't make them bearish; that makes them locking in their profits. And they still have at the same time, more potential depending on how they insure it. So, and that's kind of like the answer to that. I guess if nothing else, I'll drift over to the dollar index again. Let's go see where the dollar index is right at this moment. Where are you right at this moment? Let's see, right there. There we are. And as you can see right there, that's the dollar index. It's been hugging this 104 area. The high today is like 104. Was it 103.96.5? That's the high today. And yesterday it was above it, and then it closed below it. Now it's a little bit below it again. We're seeing a little weakness. Tomorrow is going to be somewhat of a active day, Markets are going to be definitely concerned on what is going on. So I guess the best way to describe that will be is that the news that'll come out at 8:30, right as we start the webinar, could have effects on the market for days this time around, which is very rare. Now, all that'll do is increase people to hedge their longs if it's bad, but I don't believe anybody's going to be actually. That Goldman Sachs article tried to make it sound like they were getting short, and I just disagree with the way they wrote that. Just because you never know what a fund has and how they're positioned. So they're not allowed to go and tell you. They're not allowed to look into their clients and go, okay, we're going to write an article and go out and tell everybody that that you're short. It doesn't work that way. Usually they have a couple of accounts to begin with. They could be long at J.P. Morgan. They could be long at Morgan Stanley. They could be long at Charles Schwab, and they could be literally using Goldman Sachs as the broker for the short side, the selling side, so that they can not have to worry about confusing things. So, yeah, I guess I've kind of cleaned that all up. All right, so now from the dollar index, you can see it's in the weekly buy. We remind you each day about where they're at. You can see it's been that weekly buy a good solid 4 weeks now. The daily, though, is still in the sell for the last 5 days. And, it's just not going anywhere particular, just in a sell for 5 days, It goes higher, it goes lower, it goes higher, and today it's doing the lower again. Let's see. Jan says this market is dull. It is. It is. It is a dull market. And that's because we're all stuck waiting for the election. Look, we're being governed in the most strangest, outlandish way ever, and as far as we can tell, maybe American history. So we have 300 years of a consistent pattern. Yes, CPI. Everyone is just waiting for the CPI since Friday. Right, exactly. But overall, the markets are relatively dull because they're waiting for the election. Every day it goes by. Now we're under 7 months, I believe. So June. Let's see. May is 1 month. June is 2 months. July is 3. August is 4. September is 5. October is 6. And so we are under 7 months because November is, well, we don't really do much. So it's definitely solidly 6 months. All of April and May, all June and July, all August and September. There's 6 months right there. And then October, basically. And that's 7 months. And then it's just a little underneath it after that because we're at April 9th at this point. So we're about, the election is November 5th. It's like within the first 5 days of the month. So, and we just sit here and we have to put up with it. That's just the way it goes. Now, the currency markets have been better products, I would say, in trading. Let's go over to the euro. There it is. You can see the euro's been lifting up for 5 days. Been daily buy. But notice the weekly can't get going. So it's just more sideways action. Just treading water. And it's the euro is I see their spending. I saw this morning that let's see, Marco is dull. Everyone is just waiting for. Yeah, right. I saw where the German government, for the first time this year, is going to spend the amount they're supposed to spend in NATO. So I don't know how long have they been going on. I know that they're underpaying a lot. The German government, because you need to do that when you're feeding the socialism. It means you got to have the money from somewhere. But in this case here, they're at a point now where we're seeing Germany. This morning I saw an article that said that the German government has agreed finally to pay and build what they're supposed to build for the first time. They've been underneath a minimum. So that should create jobs, and that should get some things moving along, on some level. There's no doubt about that. And what's that? It's not the Etardon now, was it? The Griffin? The Swedes have got there's talk of like getting other countries involved building the Griffin. So that's the fighter plane, which is the Japanese are doing the same thing. They're going to build a fighter plane with the British and who's the third one? I forget who. Oh, Greece or Italy. I think it's Italy. So it'll be Britain, Italy, and Japan are going to build a fighter plane too, something like the Griffin. Supposedly the Griffin is very stealthy. You can be like sitting next to your opposition and they don't even know you're there. So. All right, let's see. Where do we go? To the British pound. Let's see what the pound looks like this morning. There's the pound. Same situation, a daily buy for 5 days, and in a weekly sell for 2 weeks, and going on a third now. See, it just shows you that the market itself has no desire to make any serious moves. You can't get a weekly and a daily put together half the time. It's really sloppy. All right. And then from there, we'll go over to the Swiss. And there's the Swiss. and it's in a daily buy for 2 days. We should steal some of these lines over here, like that. And let's see. Do we have any other lines I can steal? There. Oh yeah, I can grab a couple of those. That's cool. Let's put that one right there. Let's move this over so I can steal it when we need it next time, like that. There we are. And so went into the sell. We got to put that sell in there too. We had a couple days of selling, but not a lot of pressure, and we're still hanging in the 90s. Low. I mean, like 90, 91 area. It's I commend the Swiss bank. They've got it figured out how to fight inflation realistically. That's what the problem over here is right now. That's the great debate. They are taking the bonds down. Let's show you that. They are putting pressure on the bonds for the last couple of days, but I think today they're just firm or up a little bit. There you go. And you can see there it's just a little bit down for the day, and it's in a daily buy still, and a weekly sell. So it just shows you that they cannot. Matter of fact, was it Jamie Dimon from J.P. Morgan, the largest American bank, came out and said yesterday that we could go to 8% on the interest rates if things just don't work out. It's like, wow, really? I can't even imagine 8% because I think the economy is so geared towards like 3%. And so if they jack this up 3% in the wrong direction instead of taking it down, it's going to be a bumpy ride. That's for sure. It's going to be a bumpy ride. And that's the best way I can describe it. Let's see, that goes there, and let's put that back up there. There we go. So from the let's see, not that, minimize that. Let's go back to the currencies. But that's the 30-year bond, still staying inside that big giant flag or triangle. I think it's a flag at this point versus a triangle, but it started off as a triangle, now it's a flag. And you can see this is the where's that mouse at? Up in here is the beginning, the 1, and then here was the 2 down in here, and there's the 3. Then the 4 was this was when it was just a triangle, and then when it broke that, there's the 5. The rule is that it takes out this in here, and then this, and it did. It went down to this, but now it's even lower than that, so it's turning into a flag. And the flag is the W.D. Gann flag versus the R.N. Elliott triangle. And this goes 7, so it bounces down in here in the 6s, and then it finds a way to go up to here where the 7 should be. Right, the 7. And that's what we're looking for there. And then the rule is that that would be normally the end of the flag, and it chooses to do one or the other, break out the top or break out the bottom. Now, that really does fit when you really think about it. With Jamie Dimon saying, "Hey, watch out, 8% around the corner, possibly." And so just the fact that the largest banker in the United States, one of the more respected bankers in the United States, is saying that, obviously the media will hide it as best as possible. All right. They're showing a poll right now. Fewer Americans are considering buying electric vehicles this year than they did in 2023. Ootay. Let's go to Japan and see what the Nikkei currency is doing. Right there. Boy, is that thing parked on that 52 right underneath it. What did they do with the Nikkei? Let's just see what they did with the Nikkei. The Nikkei was up yesterday. Or I guess it's today, really. The Nikkei was up today. And the weekly is pushing along on the upside there. So we'll take a look at the world indices when we're done all this stuff, after we get done oil and gold and all that stuff. Or gold and oil. Or silver or copper. How about that move in the platinum? That's what I was saying. Be careful with that platinum. You got to be out of your head to want to be short that thing. All right, now from the yen, what can we say anything more about that? Obviously, on a fourth week in a buy. And kind of curious there. I guess 3 days in a buy. So we went buy. Let's steal some of these things. So we went buy right there. Then we went sell right there. And now we are in a buy right there. Pushing up. Not the biggest push. You know, the currency is in a weekly buy, daily buy. It's finding a way to push up. And then we go over to the Great Experiment. Let's see what they're doing today with that. Looks like they're, let's see, so they're in a buy. That's what that is. We need to steal one of the buys. There's a buy we can steal. And move it over. And there it is right there. We're in the buy for 4 days now. And we've been in a buy for 26 weeks. 26 weeks? Something like that. 27 weeks. It's been in that weekly buy. I always do that just for the newbies, not for the old bees. Yeah, so we've been in a buy since the second week of September. And now we are in the second week of April. So let's see. So Sep, October, November, and December are 4, and January, February, and March are 3. So we're basically looking at 7 months now in a buy. 7 months. And I imagine this thing will just, whatever this was right here, I imagine this thing is just going to hang out in here. Now this particular move right there, I'm not sure what that's all about. You know, we don't get enough news to know. I'm sure there's a story about it that makes sense. You know, the government tried to do something somewhere, somehow. Everybody got excited and then found out, oh, no, they're just doing the same as they did before. I was like, okay. And so it came and parked itself at the end of the day up at the high end of that trade. And then from there, it's been pretty much a steady fight to get into the buy, and there we are in a buy now for 4 days. All right. And that is the Turkish lira, the Great Experiment. Then from there we go over to the South African rand. The rand. Look at that. Gaining against the dollar again. And it's been pushing against the dollar that way for a while. Matter of fact, we've been looking at a triangle in that too at the same time. And it's going down there and meeting the triangle point. There it is. So it's come down and touched it. And so this thing's doing a flag. And that's the 1, the 2, maybe, I don't know, maybe it was 1, 2, 3, 4, and then 5. But then that might have been, see, it's 1 on the way up to there. Then 2 down. No, so 1, 2, something's wrong here. 1, that was 1 starting here. 2 starting here down. 3 up, 4 down, and then it broke out of it a little bit from that triangle and got into a bigger triangle. Let's see what the bigger triangle looks like even. Wow. Okay. Yeah. So here we are. We're seeing some interesting action here on the downside. And I did see gold almost up at, what, $2,400 an ounce at this point. So, and I guess that's what woke up somebody yesterday, and they had to, or 2 days ago, and they leaped at the platinum. Someone leaped at it. We'll see how long that survives, but looks like, oh, there might be touching towards the $1,000 area today. That'd be nice. Let's see. Let's see what they're doing with the platinum. We'll go to the platinum first, and then we'll go to gold. There it is. And there's platinum making another push up to the $1,000 area. And we've been in that buy since the 925 area, 920 area, and we've been in a weekly buy for, this is the third week. So the pressure is on, and it might actually get a 10% move. Woo-hoo-hoo. 10% move when what silver's gotten something like a, where is silver? Let's take a look at silver. Silver's like, is it over 28 and a half now? 20. I've stalled out a little bit in here. 28.20. So that moved from 22 to 28, and let's see, like a 33% move would be in the 29 area, I guess it is. A little above the 29 area. So that's making a really good move. Now gold is starting to put more pressure on itself. Right there. And you can see it's trading at 23.75. What's today's high? 23.76. Okay, so they're hanging out right there. Right on it. And you can see, weeks and buys, from the $2,050 area to now to almost the 2,400 area. That's pretty good. I mean, you're talking about close to a 17% move. It's pretty good. 16% move, something like that. Not bad. Again, just like the VIX, they're picking up some inventory just in case things go wrong. If they go wrong, the Fed will be there. We know that Daddy Fed will protect us. And what are they protecting us from? Low prices. You ever see those TV commercials where someone's advertising to sell you something at low prices? Well, the Fed is here to protect you so that you don't get low prices. You get high prices. You get inflation. You get, high firm stock market. You have interest rates trapped in a long range of higher than usual. The short term usual, not the long term. I would say the norm would be in the 3s, 3.5, something like that. So it's not a bad thing. 5.5 is not the worst thing in the world. All right. So from gold, we saw silver, and we'll just check out copper. There's the copper. Copper is doing the same thing again, lifting more and more and more. It always, to me, feels like a tip-off. When we see copper running, we think of the Chinese. We think they're, stepping up and buying their cherished metal, which is copper, and that's pretty much the way we see it. Will we see it any other way? I would say no, really. Not as long as we have the interest rates trapped like this and all the news holding off like that. It's the same. It seems like the same adventurism. All right. Okay. So no questions. So I keep on singing and dancing. He's singing and a dancing. All right. And again, we'll just go out by looking at the platinum. Look at that. Platinum has picked up $60 in 2 days. It's definitely the flavor, the choice of flavor. It's the choice of flavor right now. You would think it would be at $1,200 or $1,100 and something, but pretty much that's the end of it. At this point, I guess Ramadan ends today, so they can invade Rafah. That's what it looks like. There's a headline up on the tape there. Not Netanyahu sets date for Rafah invasion. So, all right, now let's see what we got here. Let's take a look at the energy sector. There is crude oil. It is playing with the daily sell. It's been a little sideways there the last couple of days. And so it's trying. It is trying. Let me just give it a refresh because I'm looking on the beta, and it's looking a little bit different the last day and a half. Not a lot, just a little. Let's see, go like that. Yeah, that's better. And so there we are right there. Just, yeah, just, it's looking, I want to say it's looking firm, you know, it's just looking steady at this point. I think I'm going to check the numbers, because I'm seeing other numbers, and I'm probably going to go to the exchange right now just to double check, because I can see where it should be a little different. Not a lot. I don't think it will have any real meaning, but you know, I always like to have it as accurate as possible. Let's see, and there is West Texas Intermediate. Yeah, so it needs to be adjusted just by a little bit. Just by a little bit. Yep. We'll work on that after the close. After the close of this. Let's see now. So from crude oil, let's go over to the beta and check out right there. There we go. Check out, that is North Sea oil, Brent. And you can see we've been in a daily buy for a long bunch of days. And at the same time, you can see we've been in a weekly buy for a long bunch of weeks. And so, you know, over 3 months now. The pressure is consistent, or as we like to say in the hedge fund universe, it is solid. You know, it has a consistency, and it is acting orderly. That's what it is. It's orderly. All right. I guess that's pretty much the two. You know, North Sea oil and Brent. Let's go over to natural gas. I've seen another deal is being talked. Oh, I saw an interesting headline on that one too. More natural gas production from Russia is sent to Europe than it is anywhere else in the world. What a strange situation these people have themselves in over there. All right, and there's the natural gas. You can see it's trying to lift up. We're on a second day of a buy. And you can see here we are fighting to be in the weekly. Let's see how the bigger platform reflects it. There it is. Trying to do the same thing. It's trying to do that action. And the weekly has been in a weekly sell for a long while on the big platform. I'll just show it to you. So you can see the beta has zigzagged a little bit, but the big platform has had it in the buy. Let's see, where's it at? Up there. There we are. Yeah, look at that. For, you know, since the beginning of February, end of January, it's been in the weekly sell from the $2.50 area, and it tried it once to get up there and didn't do too good. And now it's just starting to firm up again. It's not leaky, it's firm. Yes, firm. Then we slide our way over to, let's see, where is it at? It's the energy company down in Spain. I'm thinking it's at $20. Let's see where it's at. And the answer to that is, yeah, it's just a little bit above the $20 area. Yesterday they went underneath. See, that was down to the 1980 area, but settled above at 2004. And today it's at 2030. And the low today is, what is that? The low is $20 itself. And so we're seeing the energy sector look firm. We're not seeing any panic really going on in there. It's been staying consistent with the buying, that's for sure. Alrighty, who is next? Now what we'll do is we'll just go roam around the planet, see how everything is. Let's see. First one will be the Nikkei. You'll see the Nikkei was not the Nikkei. I'm sorry. The Nikkei. Nikkei. The Japanese index. You see it's up a little bit more today than yesterday, and it's in a buy with the green dot and this above the zero line, but dragging underneath it. It'll clean itself up. This is a delayed system, so it's collecting it slowly. You can see here it closed in a weekly buy last week, and more than likely we should be in a weekly buy this week since it's higher. Not all the time, but most of the time. We'll find out tomorrow. And then from there we go over to the Kospi in South Korea. And there it is right there. It's flirting with the weekly sell, but we're also seeing a lot of daily sells and seeing that little downward pressure now for like the last 6-7 weeks. 6-7 days. Just back since like March 25th, 26th, right around there. The pressure is on, and it seems to be just holding down a little bit. Pretty good move down today compared to what the Nikkei did. And then we'll go over to Taiwan and go to the Taipei index right there. Another zipped up move on the upside. I mean, chips galore. Everybody have chips. Everybody needs chips. Chips. And it's 10 weeks in a weekly buy. It's gone in and out of the dailies here and there, but pretty much each buy has been somewhat positive compared to negative. So now from the last of it all, we go over to the Nifty 50. The other side, like we head south, I guess it is. Are we heading south? Yeah, we're heading south. So we're going from the north of the Pacific all the way down to the south. We go into the Indian Ocean. Let's go see what's going on in the Indian Ocean. In Bombay. Oh, no, it's not Bombay. It's Mumbai. In Mumbai. All right, so they started the day off in the Nifty 50 higher, and there's lots of daily buys. And then you can see right here, more weekly buys. And so it's been pretty firm, the Nifty 50. And see, going from like the 21, since we went into the weekly buy back in early February, at the 20,600, I guess it is, or 500, and then now we're at the 22,000 to 22,500, so about 2,000 points. From there we'll go to the All Ordinary, and we'll stay in the Indian Ocean for a little bit longer. And there it is right there. Yesterday was up. Today is up, so more than likely it's a second day in a daily buy. And the weekly is playing all kinds of games, isn't it? Can't figure out. It's trying to get into that buy there. Maybe at the end of today it'll do it. All right, and that's last week. So we've been in a weekly buy, and tomorrow might start to show us where we are on Wednesday. Interesting. Of where we are this week in the weekly buy. That's really lagging. Normally we're only a day off, but these two products are showing us 2 days off. All right, now from there we go to the last of them, and that is we go to Shanghai. See what the Chinese are doing. And a lot of selling you can see there. Same thing here, but look at that. The weekly is trying to lift its head. So there it is there. They popped it and then backed off. They're trying to get it to go. They're trying, no doubt about that. And I guess there's more logic to buying copper than there is to buying the stocks over there. I mean, everybody's warning everybody about the stocks over there. And then there's a segment in the national media and its little competitors are all talking about how it must be a place to get long. It's time to buy, that type of thing. Since it's like 35 or 40% off its all-time highs, whereas everybody else is dancing around their all-time highs. So it does make a lot of people think maybe we should be a little bit longer, not a little bit flatter. Alrighty, from there, let's go to the DAX. There it is right there, the DAX. And they're putting pressure on that again. Yesterday they tried to pop it up, but it just wasn't enough. So you can see there, if you're looking at 5 full days in a sell there. Probably 6 at this point. And at the same time, it's been since the 17,000 area, which is now at 18,500 or 18,200. It's been in that weekly buy for 3 months now. So that's an interesting thing there. You know what I mean by interesting is that the fact that the Nikkei. I'm sorry, not the Nikkei. The DAX it follows the U.S. stocks to a great extent. So we're seeing that pressure on it, but when you really look at it again, you see it's not exactly getting crushed. See, that's the whole thing. I think that Daddy Fed will take care of everything. So this is try to go into selling, and they don't have any particular reason why they would want the market to be sold down right now. So if they have no reason for it not to be sold down, it won't be sold down. Just like the same situation when back in 2020 with the V bottom, they had an interest. They wanted the market to go down. They wanted to put the put sellers out of business. And they did. They bankrupted 3 of them. One had closed, and I'm not sure what I think the 4th one took the loss. But they lost billions. They lost all the money that they had made over like the 8 or 9 or 10 years, something like that. And the Fed was never happy about being called, they were referring to it as a free put. That's what they were saying, because they were convinced that the Fed would never allow the markets to get crushed, but they did. They used the COVID to do it, and they put those put sellers. There were 5 funds that were selling puts against the Fed for years and making billions, and they put them out of business. Because they drove the market down. They used the opportunity to keep on pushing it down, and you can see it. The moment they stopped pressuring those companies that were out of business, they announced that they were out of business, they were bankrupt. The market stopped and climbed right back up, and that was one of the tools we used to identify the V bottom. We knew that if they were out of business, the Fed was going to stop allowing it to go down, and would become the Fed put that everybody knows it is. They just don't like when people abuse it. I think that's what it comes down to. All right, let's see what the CAC 40 in Paris is doing this morning. You can see that. It's up last 2 days, and it's in a daily buy for 2 days, going on a 3rd day, it looks like to me. And at the same time, the weekly has been 10 full weeks in a buy, just getting a little weak underneath at the moment. And so there is the CAC 40. And then from there we jump over to the London market. There's the FTSE. And the FTSE has, that looks like the DAX. It just happens to be a little bit more on the plus side, that's all. I mean, it's not doing much different than what the DAX is doing. You can see we've been in a daily sell for 2 days. And it doesn't exactly look like the world is coming to any end. When we look at the weekly on the thing, it's in a weekly buy for over 10 weeks. So how do you, in other words, when we talk about these markets, how do you condemn them? How do you look at them and say, oh my God, they're junk? They're not. They're in weekly buys, and they've gone, in this particular case, it's gone from the 75-ish area to the 80th area, 8,000 area from 75. It's picked up 500 points. That's pretty good. All right, now we'll jump across the pond, and we'll go to, and right there is the Dow Jones Industrial Average. Now they've been pressuring that down. So in other words, when we looked at the DAX, where's that DAX at? Right there. It has that same pressure way, but the price structure is different. So it looks different, and so that's why it is different. Now you can see here it's trying to lift up. We're getting a green dot, and at the same time, we were in a weekly sell last week, and we are flirting to get into the weekly buy now. So we got the week to figure that out. But tomorrow is going to be, a game changer on some level. Let's put it this way: it'll cut out some of the boredom after tomorrow. And then we go to the NASDAQ, or the Tech 100 on Dukascopy. Same situation, went into the sell last week. It's trying to get back into the buy this week, and the daily is trying to lift up too. And then, let's see, where's that? Why is it not? Okay, yeah, that's the weekly. So there you go. That fits it all. Then we go to the S&P 500, right there. Same situation, just like the DAX, but it just doesn't look as bad. And at the same time, you got the daily trying to get into the buy. And you can see here we have 10 full weeks, again, of weekly buys. And what can you say? When you have 10 full weeks of weekly buys, it's not the worst thing in the world, Now, out of all this time, we've been looking at all these products. Oh, let's look at this, too. The RTY, the Russell 2000. Let's just take a look at that one. Right there. And you can see here it's in a weekly sell from last week and still in it, but it's trying to get through the zero line on the daily and the weekly there. And we've come off of the 2150 area down to the 2050 area, and now it's pushed back up to 21. Now, I guess we could label this, we talked about the VIX for the first 20 some odd minutes, so we could basically call this like VIX shows no strength. I think that's the best way to describe it too. It really doesn't. It's just short-term buying. We are in a second week of that buying, but not really totally convinced. Let's see. Let's put it up on the beta. There it is, right there on the beta. And so you see just a little sloppiness after yesterday's sell-off. It's pressuring down. And you can see the daily is trying to get into the minus side, and the weekly is rolling over on the beta. Let's see where it is on the. Do I still have it open? I do have it open. Let's see if we have if they filled it in yet. Right there. There we go. Let's see if we go like this with it. Let's see what that does. And then we got to figure out a name for this, what to call this webinar today. What was the theme? It's still showing. There you go. Okay, so there it is right there now. Let's go push it over to here. So you can see it right there. It's basically unchanged, but it is pushing into the sell right there on the daily. Okay. And the weekly is drifted down a little bit more. Now we got to come up, like I said, we got to come up with a title for today. Probably the VIX would be the since that was the bulk of the first half hour. We'll label it that. Let's see. VIX, VIX, VIX. VIX looks firm, but not strong. That's going to be the title today. Whoop. Backspace. Strong. ST. There we are. And that's the title today. And I really don't. It's nice that it's in that weekly buy. We'll see how it is. Well, tomorrow. That's the whole game. Is tomorrow will be the wild and woolly liftoff of what's going on for at least a couple hours, depending on how it plays. Some are saying if it's the same as last month, then they feel comfortable thinking that there'll be no interest rate cuts. And I think Mr. Biden is really hungry to have interest rate cuts going into the election. So, a sip of my tea and a song to you. So, Happy trails to you in trading. Happy trails to you, to all our trading friends. All right, traders. Catch you tomorrow. Tomorrow's going to be hot. Right as I'm probably turned on a few minutes before the webinar. Even I'm going to probably kick it up just before it. Because it's going to be hot. So we'll check it all tomorrow and see you all tomorrow. This is Doc saying arrivederci.